Hello, I'm George Kitta, financial strategist with Four Oaks Financial. Welcome to Market Moments with George. Please like and subscribe to get weekly notifications. Hey everyone, welcome back to the channel. Today, we're diving into the top 5 financial headlines you absolutely need to know about this week. We'll be covering everything from potential port strikes and their impact on the economy, flashbacks to 2020, to the latest inflation numbers and how they're affecting your wallet. Plus, we'll break down some key investing concepts and even see where you stand on the wealth ladder. Look, I get it. Financial news can be about as exciting as watching paint dry. But trust me, this stuff matters. It's about understanding the forces shaping your money so you can make smarter decisions and come out ahead. So, whether you're a seasoned investor or just starting to dip your toes into the world of finance, grab your coffee, buckle up, and let's get right into it. Alright, let's kick things off with a headline that might give you a serious case of deja vu. Potential port strikes. That's right, folks. Those crucial gateways for global trade might be facing some choppy waters again. Remember the supply chain chaos of 2020 and 2021. Yeah, well, we could be in for round 2. Contract negotiations between dock workers and port operators are heating up, and if things go south, we could see major disruptions at ports across the country. What does that mean for you? Well, potentially longer shipping times, higher prices for goods, and maybe even some empty shelves at the store. Remember the great toilet paper shortage of 2020? Nobody wants to relive that. Now, I'm not saying you need to start hoarding toilet paper just yet, although a little extra never hurts, right? But it's definitely something to keep an eye on. We'll be following this story closely and keeping you updated on any developments. In the meantime, it might not be a bad idea to start thinking about your holiday shopping early this year, just saying. Let's move on to our next headline, which is all about the 2 I words that seem to be on everyone's minds these days: inflation and interest rates. These 2 factors are like the twin engines driving the current economic conversation. The latest data shows that U.S. consumer spending rose moderately in August, while inflation also ticked up slightly. This uptick in spending indicates that people are still willing to open their wallets, despite the rising costs. Now, on the surface, that might seem like a good thing. After all, more spending usually means a stronger economy, right? It suggests consumer confidence and a robust market. Well, not so fast. You see, when inflation rises, it erodes the purchasing power of your hard-earned dollars. This means that the same amount of money buys you less than it did before. That means you're essentially paying more for the same goods and services. Everyday items like groceries, clothing, and even utilities can see price hikes. And let's be real, nobody likes feeling like their money is shrinking faster than a cheap sweater in the wash. It's a frustrating experience that can lead to financial stress. The Federal Reserve has been trying to combat inflation by raising interest rates, which is kind of like stepping on the brakes of the economy. Higher interest rates make borrowing more expensive, which can slow down spending and investment. The goal is to cool down spending and bring inflation under control. It's a delicate balancing act, as too much braking can lead to a recession, while too little can let inflation run rampant. So, what does this mean for you? Well, it's a bit of a mixed bag. On one hand, higher interest rates can mean better returns on savings accounts and other fixed income investments. On the one hand, you might see some relief at the pump as gas prices have been trending downwards. This can provide a bit of a breather for your budget. But on the other hand, you might feel the pinch in other areas, like groceries and housing costs. Rising interest rates can also mean higher mortgage rates, making it more expensive to buy a home or refinance an existing loan. It's a complex situation with no easy answers. The best approach is to stay informed and make financial decisions that align with your long-term goals. Alright, let's shift gears now and talk about something a little more fun: investing. Investing can seem daunting at first, but with the right tools and knowledge, it can be incredibly rewarding and even enjoyable. Specifically, we're going to break down a super helpful concept called the Rule of 72. This rule is a fantastic shortcut that can save you a lot of time and effort when planning your financial future. Now, I know what you're thinking. George, math on a Friday? You're killing me. But don't worry, this isn't the kind of math that will make your head spin. It's straightforward and practical. But trust me on this one, the rule of 72 is actually pretty simple and incredibly powerful. Once you understand it, you'll see how it can be a game changer for your investment strategy. In a nutshell, the rule of 72 is a quick and easy way to estimate how long it will take for your money to double based on a given interest rate. This can be incredibly useful for setting realistic financial goals. All you do is divide 72 by the interest rate, and voila, you've got your estimated time frame. It's a simple division that can provide you with valuable insights into your investments. For example, let's say you invest $10,000 in an index fund that historically returns an average of 7% per year. This is a common scenario for many long-term investors. Using the rule of 72, you would divide 72 by 7, which equals roughly 10. This simple calculation can help you understand the potential growth of your investment. This means it would take approximately 10 years for your initial investment to double to $20,000. Pretty cool, right? It's a great way to visualize the power of compound interest over time. It's like magic, but with math. The rule of 72 can make the abstract concept of compound growth feel tangible and achievable. The rule of 72 highlights the power of compound growth, which is essentially earning interest on your interest. This is one of the most powerful concepts in finance. It's like a snowball effect for your money. As your investment grows, the interest it earns also grows, leading to exponential growth over time. This is why starting early and being consistent with your investments can make a huge difference. Now let's talk about everyone's favorite topic, wealth. It's something that affects us all, whether we like to admit it or not. Specifically, we're going to dive into the 7 levels of wealth, a framework developed by fellow YouTuber Grant Sabatier. This framework is designed to help you understand where you are financially and what steps you need to take to move forward. These levels provide a roadmap for financial progress, from getting out of debt to achieving complete financial freedom. They serve as milestones that can guide you on your journey to financial well-being. So, where do you fit in on this wealth spectrum? It's important to be honest with yourself about your current financial situation. Level 1 is all about survival, where you're living paycheck to paycheck and struggling to make ends meet. This is a tough place to be, but recognizing it is the first step toward improvement. Level 2 is about stability, where you've got a handle on your expenses and are starting to build a small emergency fund. This level gives you a bit of breathing room and a sense of security. Level 3 is where things start to get interesting. This is the stage where you begin to see the fruits of your labor. This is the debt-free stage, where you've paid off all your high-interest debt and can finally breathe a sigh of relief. Imagine the freedom of not having those monthly payments hanging over your head. Level 4 is all about building wealth, where you're consistently investing and watching your money grow. This is where you start to see your net worth increase and your financial future looks brighter. Level 5 is financial independence, where your investments generate enough passive income to cover your living expenses. This means you no longer have to work for money. Your money works for you. Level 6 is financial freedom, where you have the flexibility to work on your own terms and pursue your passions. You can choose to work because you want to, not because you have to. And finally, level 7 is abundance, where money is no longer a concern and you have the resources to make a real impact on the world. At this stage, you can focus on giving back and helping others achieve their financial goals. So, there you have it, the 7 levels of wealth. Each level represents a significant milestone in your financial journey. Where do you stand today? Take a moment to reflect on your current financial situation and be honest with yourself. And more importantly, where do you want to be in the future? Set clear financial goals and create a plan to achieve them. Remember, financial success is a journey, not a destination. It's about making consistent progress and celebrating each milestone along the way. All right, let's wrap things up with a quick look at the stock market. Wall Street has been hovering near record highs, but it's been a bit of a roller coaster ride lately, kind of like that one amusement park ride you swore you'd never go on again, but secretly kind of enjoyed. Meanwhile, Chinese stocks have had a monster week, with some major indices posting impressive gains. Now, it's important to remember that past performance is not necessarily indicative of future results, but it's definitely something to keep an eye on. The stock market can be a volatile beast, but over the long term, it's historically trended upwards. Remember, investing is a marathon, not a sprint. And that's a wrap on today's top financial headlines. We covered a lot of ground today, from potential port strikes to the latest inflation numbers, and even dove into some key investing concepts. Remember, staying informed about what's happening in the financial world is crucial for making smart decisions with your money. It's not about becoming a financial expert overnight, but rather about being proactive and taking control of your financial future. Thanks for tuning in, and don't forget to like, subscribe, and hit that notification bell for more updates. See you next time. Stay financially savvy, everyone.
Take control of your financial future. Contact me today.